Hey, Market Senior Leadership, OPs, team leaders, MCAs. This is going to be a sheet. We're going to walk you through exactly how you can project out everything from your units, your closed volume, your GCI, your company dollar, profit, owner profit, profit share. It's going to be about 10 minutes. You're going to love this tool. Take a look. This is Rick Bosley. I'm an agent and investor, a Keller Williams approved trainer in Orlando, Florida. Have been in the leadership position since 2011, and in that time built some tools that helps me as a team leader to be able to project out and plan not only what we can do in terms of gross commission, income, company dollar, profit, also my bonus create from that. So if this is like you, you're going to love this tool. So let's take a look here. What this is a nice little Excel spreadsheet. Let me view this and let's get rid of I guess we're good there. So we've got this Excel spreadsheet, and the green is what you're going to fill the blank in. If it's white, don't touch it. In fact, I don't want you to because it is all formulas. You can see if it's white, it's a formula, and if you touch it, you break it, you buy it, it's free, so the price is good, it just won't work anymore. So if it's green, you touch it, and I'm going to actually lock this so you can't break it. You're just going to fill in the blanks. You're going to use this in conjunction with the multi-year trends, and you're going to be able to look, and we're going to test how it's done for my local market center here for this first 3 months because it's pretty accurate. So the average price point here, whatever it is, if you're 250, put in 250. If you're 300, you're 300. Now watch this. When we change this number, all of these are going to change as well. You saw that blip. This next one's going to be how many agents would you like to net every month? If you've got a goal, if you've got an actual, you want to be realistic, conservative, aggressive, whatever you want to do, go ahead and put that there. So if it's 2 a month, keep 2. If it's 3, put 3. If it's 4, put 4. If it's 8, put 8. You can see everything can change. Oops, I just changed a whole lot besides agent income. So there, 8, change 8. The next thing I'm going to ask you to put in is your GCI percentage of sales volume. Now that sounds a little complicated. You got to title it the same exact thing as you're going to find in the multi-year trends report. Essentially, this is the complex way of saying what's the commission. What's the commission that the office and the agents are receiving there? So for our office, let's say it's 3%. Expenses to company dollar. So if how much of your expenses are going to company dollar, and if you take the adverse of that, how much of that is profit? So this is about 65%. And then what is your starting agent count at the beginning of the year? So you'll see this is all created there, and we're going to look and we're going to use a real life example against the multi-year trend. So this is the multi-year trends for the office that I'm currently an agent and an investor in, and I'm going to move my little bubble head so we can still see it. And we're going to start with some of these core competencies you can navigate through. And if you like this and you want a link, then make sure you subscribe to the YouTube page so you get notified of everything like this. And in the comment section below, you'll see a Google Drive link, and I'll have it open so you can just download this Excel spreadsheet to be right as part of your toolbox. Okay, so starting agent count, we know this year, so 2020 January was 176. So let's go ahead and put that here, 176. Fantastic. The next thing we need to know is the average price point. So if we go down here, we're going to look for before we do that, let's talk about what is your agent growth. So I use the number 2 for our office. I'm not sure what it is. Again, I'm an agent, so I'm not a team leader yet. When we look at what the agent counts have been, we were net 5 month 1, -2, -1. The trending track record last year, we were net 20. The year before net 1, then net 16. Then it isn't interesting, and I'd be curious if you guys look at your multi-year trends, are you doing this as well with your net agent count? You'll look, almost always it's going to be cyclical from higher to lower. I guess these are low, low, medium, 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 very high, very low, higher and lower, higher. If this is a trend line, it's going to be lower, yet that typically, if we're running an agent business, we're saying is a lack of systems or org chart. So take a look at that and see what patterns are showing up. But we're going to go ahead and put here for this group a month agent count of net 2. By doing that, you'll see right here agent count goes from 76, 78, 80, all the way down here to 98. Now, if you net 24 and you net 2 a month, then actually you might start with a 176, because again, you're going to see this is the end of January or where you're at end of last year. So there we go for that. And then actually starting agent count, this says trading. Let me go ahead and change what that needs to, I'll change that before you get the link. We are going to put 174. Because if you want a net 2, then you want to end up with a net 24. So there we go. That's where we ended last year with. total agent count. Where did we end last year with? We ended last year with 171. That's the number you're going to put in, December 31st. And we want a net 2 to end in 193. There we go. That's going to be some accurate information. So we've got this checked. We've got the agent count checked. Let's take a look more of what else we have to do to make this thing work in our formula, and then we're going to share of how it works. So market share appointments, gross agent gain, net agent count, closed units. Now we have closed units here, but you see that we're not, it's a formula. So this is projected. It's not just us tracking. If you wanted to track it, we'll just use them all to your trends. It's done for you. This is us to do our best to predict the future. So we're not going to put in closed units. Again, only thing that we're going to be doing is green. This is green. This is one of your big columns here. Trending of units per agent. Every market center is going to be different. Your productivity is going to be different. Your maturity is going to be different. So this is not something we can just do a projected because there is seasonality that comes into play. So what I'd like you to do is look at your trend lines of what you've done. Now, essentially closed units per agent. If you take all of your agents and you divide how many closings were there, how many was divided up equally, and it's 0.4. These first 3 months been 0.4, 0.4, 0.4. Last year and the year before, pretty consistent, right? We're seeing some 0.4s here in the first quarter. Now watch what happens here come May. 0.7888997, 669998, 87889. So we know that there is seasonality still in this office, even though we're in Florida around the schools and everything else, and then it drops off again around the last third, 0.5545. So what I did just for projections, you can do what you want, is type in what do you think it might be based on trending projections. So 0.4, 0.4, 0.4. I went up to the 0.7s and then back down to the 0.4. This is going to give us a surge of closed units here because even though our agent count is progressing nicely by 2, more agents are producing, and then it drops down again. So that's going to be a number we need. Let's keep going here for what other numbers we need. We've got our net agent goal. We've got our closed sales volume is going to be calculated for us. Listings taken, we're not doing listings taken volume. And we could build this out of more projections, yet these are some of the leading measures, I think, that give us some of those lagging measures. There you go, average sales price. So I want you to put that right here for average sales price. And I think the best way I would do this is always update it of what's happening either last year to close it off or year to date. So if you want to do year to date, I think we're good enough there. It's up to you, but let's go ahead and change this to 293, 250, just like it says. So we're going to use this exact spreadsheet to see where we're at. And you can see it changed some things, but that's through the formula. I think the last thing we need here is what is the commission and what is the expenses that we're having right now. And we're going to see how all of that changes. So close GCI. GCI percentage of sales volume, also known as your commission. So we have 3% up here, and that's what we like to say is traditional. And frankly, it used to be 3.1, 3.1. And we've seen a trend line go down in the last 2 years, has been 2.7. So let's go ahead here and call a spade and say it's a 2.7. That's what our agents are getting, 2.7. You see it affected that GCI that came down. As we keep going here, a couple other things, and then we're going to let this spreadsheet just do its work for you. We're going to scroll down to company dollar is going to be an algorithm. This is it right here, company dollar percentage of GCI. So this is this column right here, company dollar percentage of GCI. And you'll see for this market center, it's very heavy in that first third, pretty medium in the second third, and on the lowest of the third is the back. So what does this mean? This is directly correlated with your cap management report. And you know, the cap management, they say how many actual cappers do you have in each month, and let's get that baseline. Yet not every capper is created equally. A $24 million capper is going to cap in 1 month, and a $2 million capper is going to cap in 12 months. And then they're going to be beautiful for your cash flow. Versus $24 million capper is going to give you $18,000 or whatever your cap is in 1 month, and then nothing else the rest. For this office, because I'm in it, I know that probably 7 of our top 10 agents all have an anniversary rollover in the first quarter. You're seeing that right here, and many of them are capping in 1, 2, 3 months, and you're seeing that surge. Why you're seeing this maintain, although those top performers are already capped, that's when we look at over here that says, and our half cappers are doing more business and we're getting more units per agent. When we have less units per agent, and many of our big cappers have already capped, that's when we're having our struggle here. So it's another way to look at your cap management report, that if you wanted to protect your cash flow, don't necessarily look at your humans of how many cappers do you have. Look at what's your company dollar percentage of GCI. So these numbers right here, I want you to go ahead and just look at this and say, what is it last year? And let's use exact ones. And I just rounded up or down because we're looking for a good projection. The only thing that I would say you would go different from this is if you had a major team or merger, join or leave, that would dramatically affect what this is going to be. But other than that, I would use that as a baseline. And then we're still looking for now the profit. And so let's keep going down. It's going to be towards the bottom, not approved expenses. It's going to be expense percentage of company dollar. And I wrote it just like this, expense percentage of company dollar. And this says 65%. Now you might notice here 66, 83, 95. You're going, Rick, where did you get 65 from? I'm looking at historical averages, and check this out. Last year, 65, 66, 69, 62, 63, you guys get the point. So historical average, and you guys just decide what's going to be your trend line. Right now, we're 80, and there's been a little bit of, this is spring 2020. Everyone in the world knows what happened in spring 2020. It is coronavirus season, so expenses are a little bit wonky. We're doing some protection thing, everything with the ALC and the OP. I'm keeping 65%. I'm having trust, I'm having faith. So that's all done. Let's see how all of this now communicates with us for this sheet. We have the agent count. Now, if you can net to every month, then you're going to be 171 down to 193. Based off of that, you're going to have 0.4 units. It'll close you out 68 units. With those 68 units, your volume with your average price point will give you 20,058. Watch what happens. If we double this, 600,000, everything went up, right? It's all done for you. So we know it's 293, 250. Let me see. There it is again, and you're going to see some of the trends. So don't touch this. You can't touch this. It's locked, but it's going to be taken care of for you there. From the volume, now we go to GCI, your gross commission. Well, this is basically taking your volume times your average commission. So right here, you can see it is times E2, which is this column right here. If we were to change that and all of a sudden you get a higher percentage, then we want to go to 3. Volume's going to stay the same, yet look at your GCI and everything else go up. There it went up. See there? Beautiful. Ooh, okay. Now we have all of the gross commission income. We're saying how much of that's staying to company dollar and how much of that's getting paid out to agents or other cost of sale. Well, in the first third, it was a whole lot, and then kind of a medium, and then a little bit less. So you're going to see our company dollar, even though it's pretty consistent over here, is higher on the higher side because of our units and the struggling side. So if we're looking at expense management, when should we be allocating for that? Well, in the fourth quarter, it's tight, not only seasonality, also with our cap management report for this office. And then for profit here, we know the expenses are 65%. I'm going to go ahead and erase this at 35% because that was specific. So whatever yours is, it will be. And this formula is set up to say it is I9, which is your company dollar, times your expenses minus 1, so 65% minus 1. So it's I9, company dollar, times minus 35%. Now we don't want a negative number because we're not going to lose money. So then multiplied by -1. And there we go. So what's nice is we have some nice round numbers of 100,000 company dollar, 35,000 profit. And then finally for profit share, and this is a guesstimate, it's a little trick because the profit share algorithm is a little bit complex, yet for general terms, there's a little trick, which is you take your total profit, you divide it by 2, and you plus or minus 2,000. So if you look here, oops, let me get out of here. There we go. Owner profit, move my little bubble head, is total profit plus 2,000, total profit minus 2,000. So these two things will equal total profit right there. So that's how the algorithm works, or the little spreadsheet works. And what I love about this is if you know what your average price point is, how many you're going to net, what your commission is, what your profit is, and where you started, and you look at these two trend lines right here, you should be pretty accurate unless there's something dramatically that changes your market center in predicting your volume, your GCI, your total company dollar, your total profit, your owner profit, your profit share, probably your bonus if you get bonused off of that. So, we talk about the 4 conversations as an agent, starting with the end in mind, or the book, profit first. I've got it right here. Profit first is, well, let's start with this column. How much profit would you like to make? And let's reverse engineer that sucker. Let's see how this compared to the actual multi-year trends. And if you like what you're seeing and you've got to run, I get it. Do me a favor and go ahead over here or wherever it's going to be and find that subscribe button. You'll see some more stuff like this. And at the end, you're going to see a link that I have. And actually, I'll put it up there as well. A link that I have to the agent version of this. The agent can completely project out what they want to do based on the number of conversations. But let's see how we did here. When we look at this multi-year trends and how accurate or not accurate this formula is. So we know the agent counts started at 171. We want to net 2. Let me get to the top page here. And so far we netted 5 minus 1 minus 3. So we were, for the year, a net 2, not a net 6. So it should be pretty accurate because we're still early on. So if we look at that and we look at the total units from that, closed units, 74, 65, 74. Let's see where that takes us. It's a total of 213. For us, it's a total of 208. So we're down by 5, pretty accurate still. When we look at volume, let's keep going over here to see what the volume is. Closed units, closed sales volume, 20, 19, 23 for a total of 62, 462. This projects you'll be 6878. So we are within 150,000 total volume. Pretty accurate there. Let's keep going down for GCI, gross closed commission. Listings taken, but taken volume, contracts written volume, average price. There we are. Closed GCI, 559, 534, 608. Gives a total of 1.708. This is actually projecting 1.643 within 50 to 60,000. So pretty accurate projection there so far. And again, we're projecting to be at net 6, not at net 4. So it makes sense that we're always just slightly lower. Let's keep going of where we're going to be. You've already put this in, so we're not going to compare that. Yet we're going to see what this has done towards our company dollar. Trend line says we'll be slightly lower, and we can still go catch up. So let's find company dollar. Paid on volume. There it is, paid on volume, 102, 75, 89 for a total of 267. 295. So we're within 10. And this is a story that I'm going to go look as an investor, as an OP or a team leader that says, okay, if we should be at 97, 109, 88, why are we not? Because look at last year, 80, 111, 106. 102, 75, 89. What's happened here? Did we lose a big capper? Did a team get less? Is there a significant agent? Did we shift someone somewhere? Something's happened. There's a story. Let's go figure that out and fix it, or be aware of it, or plan around it. So it's going to tell us the story based off if the projections are off. So company dollar is still within 10%. Profit, we already saw that was a little bit low when we looked at the profit percentage, yet let's just keep looking down so we can see exactly where it's at. And it has an owner and a profit share separate. If you look, remember it was up like 95% was the expenses. There we go. So they weren't running at 65%. They're running at 83 and 95%. This is the coronavirus season. So the 95% was a lot of, us kind of saving our acorns, not knowing what company dollar would look like. So it was all approved by OP and regional director and ALC. So all is good and kosher there. That's between you and your leadership team to figure out. Yet, had we had just normal projections of that 65% expenses, 35% profit, we could and should and still can have this for total profit. If you like this video and you want to see more videos like it, then make sure you go over here, and subscribe to the page. Click the little bell. If you really like it, you'll get it. Over here, I've got information for a playlist that you might like for leadership. So if you're a team leader and you want more, check out this playlist. Or down here, there's an agent equivalent video that you can look at all the projections, and I'll show you what that is. So that'll get you set up for success. I trust this was helpful for you.